Basically, over the past week, 2 weeks, you've seen Palantir dip down from highs of 120 down to around $80, and it's sitting around 85 right now. And this is the area we talked about being a pretty big buying opportunity across the board. Now, there's a good and there's a bad visual of what's happening here, because you look at some of the reports of what's being said, and it's among the top retail trading stocks, and Palantir could be the most vulnerable to lose all of the retail momentum. And if I were to pick a single name that could be the most risk to unwind, it'd be Palantir. Vanda Research Senior Vice President Marco Accini. Very interesting viewpoint of what's happening here. The funny part is no one was really saying this when we were absolutely mooning into that 125 level. And now that we're down, people are saying down, 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 sell, sell, sell. And it's funny how this happens. I could go on a tangent about people saying when you were going straight up, do I buy here? Do I buy here? And then do I buy here? But now it's do I sell here? Do I sell here? Do I sell here? And it's a trend that we're all familiar with. Do I sell, 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 sell? And when you go up, it's do I buy, do I buy, do I buy? And so when you're looking at the market and you're looking at stocks, you kind of have to disconnect that viewpoint. It's more of, is it a name that you like? If you wanted to buy it up here at 120, why don't you want to buy it at, $80? So let's talk about overall levels, what I'm looking at, buy zones, sell zones, etc. Now in the short term, I'm going to tell you maybe what you want to know. Okay, so first, going over the chart, what we're looking at. This was my buy zone, coming back into this previous overall support turned resistance, right? You had a really nice gap up. Clearly, there was no liquidity, so we knew under $100, you were probably going to come down to $85, $86. Go watch previous videos. We talked a lot about it. It made sense under $100. Now that you're here, it's pretty interesting. The main question I have is that you've broken below this, and if you follow with what I'm watching, I typically like to see a break, a retest, a continuation of levels. Now, right now, you did see some more aggressive selling throughout the week. So if Palantir is able to get back above this level, I am looking for buying. So if we can start getting back above 86, 87, I think we have room to start churning back towards 95, possibly 99, 100, maybe even back into highs. So it becomes a better and more interesting opportunity on the buy side. There's a handful of other names that I think are really interesting. One being HIMS, which is responding really well to some of these other levels, but you're seeing similar opportunities out there, HIMS, Hood, etc. And it was funny that people were mentioning all these other names, and it was, just euphoric buying. And now when you dip, you're like, well, what do I do? Is there more, downside coming? The point isn't, is there more downside? The point is if you're a long-term investor or if you're a short-term investor. If you're short-term, then I probably wouldn't be looking to buy until you can mount these levels, right? Now, I will say you do have other big levels coming in as well, the 100 MA, and then after that, you have your 200 SMA, which is all the way down at $50. And that'd be like your best opportunities down there. I'll just tell you right now. But going a little bit further, it's important to know, why was the weakness setting in? What is the downside risk there, okay? So when you look about what's happening overall, a few things looking what's going on, right? Now, on the bright side, you had your U.S. government revenue over the past year increased by 45%, and then its commercial sales increased by 64%, which is, I think, over the next few years of Palantir, commercial sales are going to be the driving force with overall growth for the company, okay? It's really led with its government sales, but commercial is where it's going to start growing even faster. Now, it's also worth mentioning the downside here. Alex Karp, the CEO, was selling a lot of shares and announced another plan to sell more shares. At the same time, the new defense secretary, Pete Hegseth, I think they pronounce it, said they are going to be reducing the budget for the Pentagon and just overall spending in government contracts. Now, the question is, does this directly hit Palantir? You would assume there's a big risk there if they're reducing, I think, by 8% of their total budget, that's going to directly impact Palantir. But again, if you look at the government, what they're doing, it's all about AI, efficiency, everything along those lines. Palantir lines into that. So if there's one company that could get around this and be more of a mandatory spend, you would assume Palantir is that name. But again, it's very important to understand with the rise of cloud, AI, all these other things, and data centers, guess what? Commercial sales will continue to grow. I would be willing to bet money on that. Okay. Very, very important, right? Palantir stock has fallen more than 20% over the past 5 days, following reports of a potential 8% cut to U.S. defense budget over the next 5 years. And again, that is over the next 5 years. This highlights the risk of data analytics companies that are consistently warned about the regulatory filings. The 10K filing they just recently did on February 18th, Palantir explicitly acknowledged this vulnerability. The U.S. government spending levels for defense and other related programs are uncertain and may not be sustained at these levels associated with government fiscal year 2024. Very important to know. They've even mentioned this and what's happening there with the growth, which comes back into Alex Karp and that uncertainty. Is that why he's selling those shares? So again, although we look at the chart, although you look at where you're at and you're like, this is one of your better opportunities, and if you start to mount these levels, it becomes a big buying opportunity. You have to acknowledge the fear that is there. Number one, your PE ratio is literally a 450, and I don't even think your forward-looking PE ratio is that good, to be honest. So it's definitely overpriced in the short term, right? So if I'm looking at it from a long-term viewpoint, this isn't the best opportunity. The trade that's really there is getting back above 86, 87, trading it back into 100, possibly back into highs as well, if buying steps back in. You're going to be hit with the worst of it as of right now because it's all, again, what's happening based on those defense cuts and Karp selling. But again, I do think the more you look at this, you see the uncertainty, the 10K filing, it leads right back into Karp. So again, that's the main downside case here of what you're looking at. Now, again, though, it's important that if you're the guy, and this is what I always say, you'll hear me mention on the channel all the time, you're going to get more opportunities with stocks. Like there's never going to be like, okay, this is your last shot to buy. Like there's always another opportunity in most cases, right? You may not get a better opportunity at all times, but there will always be another opportunity. So again, as I looked at Palantir going into 125, I was like, dude, what are you doing? Hit the pause, wait, you'll get another opportunity. You're going to get a big dip across the board with equities as well. So it's not like you're just seeing Palantir dip. You saw SPY drop over the past week from 613 all the way down to 585. Now, the thing that's different here is you've seen SPY dip, and you can actually bring in an overlay here of SPY and what's happening there. I would say that Palantir has kind of, obviously outperformed, and in some cases ignored dips from SPY. So interesting, worth mentioning, and I don't want to say that there's just a case of Palantir, disassociating itself with the S&P 500 as well. If we continue to see weakness on SPY and the NASDAQ, I do anticipate the 100 MA to be a test very soon around $70. So again, that's what I'm saying. If you're a long-term buyer, again, areas that I'm looking to get more at, again, getting back above 85, 87, or 86, 87, and then back down to 70, 72, or your next big buy zones here. Now, I will say you start to break below, get back below 63, 64. Then I'm like, man, this gets ugly. You really have to take a step back. But again, I would anticipate some sort of bounce in the short term as well towards 99, the 105 region here. I would highly be looking at that. But again, if we start to see some of that movement back into this level and we start to see a rejection there, so again, this type of action here, and then finding sellers off of this level, I'd be highly concerned and definitely want to take a step back. I think mid caps in general could be in danger. It's also worth mentioning, again, it did get added, I think, to the S&P. But when you look at IWM, not directly related to Palantir, but it's worth mentioning the IWM mid-caps are getting hit here. So I mentioned earlier as well, names like HEMS getting hit to the downside. You have Robinhood, you have Upstart, all these names that were really big winners over the past year. Go to Affirm. I can go to a laundry list of these names, right? They're all very similar charts. So they're all moving in tangent. So I do think there's a level of this that's being affected, yes, by the bad news that we've seen, we've read, things along those lines. There's another part of this that you're just being affected by the overall market. So you have to be able to associate, it's not just Palantir that looks bad. It's most names following the market to the downside. There's maybe a handful of names that are holding up right now. And again, that's why you've seen, if you look just at the market in general, names that are holding up are some of the more defensive names. I can go names like Coca-Cola. Warren Buffett's notorious for buying this. Walmart holding up. Bad reaction from earnings. The market sells off. SPY Qs get hit hard with technology. Walmart starts to bounce, right? It's just money moving into safer assets. So again, don't be shocked and don't think in your mind, okay, if the S&P, tech, semis, these other strong areas that have held us over the past year and been on a crazy bull run, if those dip, then Palantir is going to be the safe name. It's not. Like, that's just not the reality of the situation, right? The safer names are those economic moat names. So you have to understand the difference of what you're buying, what you're investing in there. Hopefully this makes sense. If you have questions, comment down below. The Twitter link, the Discord link is down below as well. Have a good one, traders.